Today we're going to be going over a moving average crossover strategy. I know I mentioned that I only use one moving average when I decide to get into a stock, but when I first started learning, it was just easier to use two. As we move down the technical analysis series, you'll be able to blend what styles you like and create your own investing and trading strategies. Again, this strategy won't get you into every single big move, but it'll get you into the higher probability ones of going in your favor. Risk management is key. We're going to start off with Visa's chart because I'm in this one, and then move into other charts that get a little bit messier. This method can also be used in any market, such as Forex markets and anything else, if you're wondering. Okay, let me explain the rules for using two moving averages. First, we're going to use this in the higher time frames. This one is the month chart. Reason being is because indicators are lagging, and most of the time indicators work better on higher time frames. This is Visa's 1 month chart. In later videos, I'll teach you how to find and pick trending stocks like this. Now, just like the last video, we're going to put on the moving averages. This one that we're adding is going to be the 30 period moving average. It's going to be represented with this purple line. The purple line will be our trend indicator. This tells us if price is likely to be moving up or down or sideways. The second thing we're going to do is add a green moving average. This will be our trigger signal. If those two lines cross and the green line goes under the purple line, like it did with Boeing, we're either going to sell out of the position or stay out of the market. I know what you're thinking. Can't we go short here in the market? Yes, sort of. But that's for a later video down the road. Let's just concentrate on the buys till we get later down this series. Okay, back to Visa. Boeing's chart made me a little sad. Okay, so we see that the green line or the 10-day moving average has been above the purple line or the 30 period moving average for a while. Now, if you've been with this channel for a while, you know that we only get in when the stock pulls back on really strong trends, and the fundamentals also have to be pretty strong. So this is how it works. Every time price, or these candles, which represent price, drop in between the green and purple line while the green line is on top, we can actually start buying. I've actually marked out the areas in which it fits that criteria. There's about 7 of them. So that means there are 7 spots in which we can actually buy this stock and has the highest probability of going in our favor. You can see a big gap where we aren't buying at all. Again, this is one of many strategies, and this one is meant to get you in before a big move, not in the middle of one. We'll talk about why I decided to build this strategy out this way when we're talking about risk management down the road in future episodes. So I've marked 7 spots. Let's figure out why. This is a trend, and it's a pretty strong one. We can tell this because the candles, aka price, is moving above the moving averages. Because we want to get in during dips and buying opportunities, we'll buy only when price falls in between the green and purple line. We want to buy during these dips because usually a strong stock, in general, will eventually have to pull back and correct. During these times, it's going to over-adjust from where it should be or its intrinsic value, and we can take advantage of that. A strong stock with great fundamentals and growth like Visa has the highest probability of bouncing back as bigger money or institutions get in to bring the price back up. But let's get back to the technicals. Okay, so it's not good enough that these prices are dipping between these two moving averages. We want to be able to move down one time frame. In this case, the weekly charts, to find a better entry point. Now, when we head to the weekly charts, we're looking for 2 things. 1, we're looking for price to be in between these 2 lines, or price to be under the purple line on the weekly chart. And that's pretty much it. Everywhere you see it following these rules, you can consider a buying spot here. Again, I marked 7 areas here that you could possibly have gotten into. There are actually more than 7, but I marked the 7 highest probability positions that most likely would have gone back to the trend and in our favor. Combining the last strategy that we learned with this one, this is actually one of the strategies I used to get into Visa today. Okay, I know what you're thinking from here, that it's too easy. There has to be more to it than that, and you're slightly correct. Remember from the last episode on technical analysis, in order to find these really long-term trends in the stock market, you'll need to find and know if the company is fundamentally strong. That's why we created another playlist called Is This Stock a Buy, where we actually look at different stocks to see if they're strong enough. After we do that, then we do the technical analysis. Okay, let's take a real quick lesson on when it works and when it doesn't. But first, let's show why we bought Visa at that spot and how to find the highest probability stock that will trend like we see. On this channel, I mainly talk about 4 metrics just to keep it a bit easier and cleaner, but I look at a few more. But if you can find a stock that hits all of these, most likely other investors will also agree that that stock is a great buy, as well as the charts will reflect that it's a good stock by being trendy, most of the time. So okay, so when we type in the ticker symbol for Visa, V, into my handy dandy Google sheet I made for real quick calculations, we want to see a few things here. We want to see that revenue growth is growing between 10 to 20% a year, and if possible, EPS to do the same, but it's not necessary. Next, we want to make sure those 4 main metrics are hit. If you aren't sure what they are, there's a playlist where I talk about stocks and what we're looking to buy, and whether or not those stocks hit the metrics or not. I'll link the playlist at the end for you. I also look at the current ratio, equity multiplier, and the interest coverage ratio. Now if all those are aligned, you get a smooth chart like Visa, Apple, Facebook, and so on. Again, most of the time. This is Delta. Delta actually hits some of the metrics, but not all of them. Revenue growth is lacking and net margins are a bit low, but that's just the industry that they're in. But other than net margins, the other 3 metrics are pretty decent. If we use this financial leverage metric mentioned earlier, we can see it's sort of leveraging its assets more with debt, which makes it a little bit riskier. And the current ratio is not at all where it should be, or at least for our goals. Because it hits some of the metrics but not all of them, we expect the charts to somewhat trend, but to be kind of choppy and a little bit rough. And that's exactly what we have here from the moves of one great big move in 2013 and then just a bunch of choppiness, the rest. Anyways, that's the short version of this strategy. If you found this content useful, remember to either subscribe, like, or turn on the bell notifications because we're going to be making more content like this. But as always, peace out. See you in the next one.